Hi guys, welcome back to the channel. If you are new to the channel, please consider subscribing so that you get notified when we post videos. Like this video, that's the only way that you can motivate me to continue sharing the knowledge and sharing systems and things and robots and all the things that you love. I will never ask for any payment. Everything is shared for free, including the systems and knowledge. Leave a comment in the comments box below. If you are looking for anything that I can do a video on or something that you want me to look for you for. But if you go to the two blogs, the links are in the description box below. If you go there are many systems, many robots, many indicators from there. Don't be lazy, just go through the blogs and see if you cannot find what you're looking for. If you still cannot find it, then you can always come back and leave a comment in the comments box below. So today we are continuing with this simple approach to trading. In the last video, I showed you how easy it is to trade this approach on the higher time frame using the daily candles on the weekly support and resistance, especially if you are somebody who is fairly patient, somebody who is just disciplined and patient. And if you're a person who does not have time to be chasing the markets on the 15-minute or 5-minute or 1-minute time frames, this is the approach for you. Look, watch the previous video. Watch the previous video and you'll learn something. So today I am going to show you my approach because on a daily basis I do have time to get onto the charts. So this is the approach that I use, and this is the second option on entries because we are discussing entries. So this is the second approach to your entries. So what I want to do is, let's find another pair. If I was analyzing GBP/USD, then I'll probably need to look for another pair then, in case somebody thinks I am only showing things that I've studied previously. Okay, so we have a funny pair, USD DKK. I think the Danish kroner, I think the US dollar versus the Danish kroner, and it's a blend chart. I don't think I've ever analyzed this pair before, but let's see if the strategy will hold up. Like I said in the previous videos, if you cannot see clearly, then go to the line graph. Then we'll try to look for the touches. Now, unlike in the previous video where we were plotting our lines on the weekly, with this approach we are plotting our lines on the daily. Plotting our lines on the daily, and I mentioned in the previous video that these lines are not precise to the micro millimeter or the micro pip or whatever it is, but these are actually zones of interest. You need to bear that in mind. Okay, then let's go back to the candlesticks. So what we're doing is we are plotting our lines on the daily time frame. Then we drop down to the 4 hour. We drop down to the 4 hour. Of course, like I said in the introductory video, this strategy, like any strategy out there, is not 100%. You have to accept that there are times where you might take losses, which is why you need to control greed, which is why you need to have a plan for money management. Don't throw in your whole account because things are looking clear. The market will do what the market wants, but with this strategy, we are trying to be there when the market does what it wants. But it doesn't mean that you are going to win 100%. Conservatively, aim is 95%. If you're good and you are patient and you are choosy with your entries, then you can probably increase that. But generally, we are looking for between 90 to 95%, say 85% to 95% success rate. The good thing about this is you are not using anything else. You are not buying any system. You are not buying any indicators. You are not buying any tools. You are not using Fibonacci, moving averages, and all those things. Those things are still fine. I know people who know Fibonacci so much that they are making a lot of money. I also know people who do not even understand Fibonacci, the concept of it. Like, it's so random, but it seems to work. Because why it works sometimes is because so many people are using it, which is why this approach works. Because when price come to these levels, so many people including the big banks, including the big institutions, when they watch price come to these levels, they've got so much interest in the direction it's going to go to. Everyone has so much interest in what price is going to do at this point. It is that interest that either pushes the price up or drags it down. In the middle there, you see price just drops. Nobody cares. But when it comes down to this point, this level, now everyone has got an interest and they turn it around and it goes up. But it doesn't go all the way up because there is interest in what to do with price on this level. Everyone is vested on this level. In the middle points here, nobody really cares. Honestly, nobody really cares. But in these points, in these zones, everyone is watching. Everyone is betting. Some want the price to go down, to continue going down. Others want to swing it back. And they do succeed in turning it back, but only for long, and it drops down. It drops down. So that's why these zones work. Actually, that's why these levels work, because people are interested in what price is going to do when it comes here. The same way people are interested in price crossing moving averages or price crossing a trend line. Let's plot a trend line somewhere. let's say there was a trend line there, somewhere there. I'm trying to be precise. You can tell that price did its thing, and once it came to the trend line, which is what you can also combine with this strategy. You can use trend lines, you can use channels. People love trading with channels and patterns and things like that. Like I said in the previous video, this is not to dispute other approaches. This is not to dispute other strategies, but this you can actually use as a basis and or to enhance those strategies, because you know naked charts, you know what price is doing. So you can see here where price met this level and the trend line. It had no choice, and it came down to the next level for some, that's 458 pips. So this is how you are choosing your entries, and we've got our zone there, which is next to our level there, and it's coinciding with this trend line. So you are not necessarily throwing away your trend lines if you're a person who loves trend lines, but you are using this strategy as additional confirmation of your trend line strategy. Or if you love moving averages, or if you love Fibonacci, or if you use MACDs, or if you use stochastics and things like that, you probably are using this as a basis for a better approach into the market. This is on the 4 hour. This is on the 4 hour, my favorite time frame. If you're busy and you can only afford so much time to trade, the 4 hourly is good. Here you can see why we had a bounce, because we are in the zone and we are bouncing off a trend line. Of course, we only went so far. This does not exactly say this is wrong. This might have been a news event. Price could have come to this point, then a news event or some fundamental thing happened, and that brought price back down. It might be, I can't remember, I don't know, this is the 8th of October, I don't know what happened. Or it might be those instances where there is just not enough interest here in price going up. Of course, they brought it up here, but then everyone decided to close their positions and price dropped. So there are still many fundamental things that also affect this kind of trading. That's why I said you cannot win 100%. There might be losses. You probably bought here, and this was actually 200 pips. This was actually some 200 pips. If you are trailing your stop, you probably could have gone out with maybe 50, maybe 100, maybe something like that. I'll show you how I manage the trades once I enter, but this video is about entries. we come to this zone. Say you lost some of the trades, but you can tell some of your entries are like right on the money, right on the money. You can tell here price is not going anywhere. uh how many 4 hours are in a day? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Say, is it 3 days? Is this 3 days? It's probably 3 days. Let's go to the daily. Yes, it's 3 days. That's 3 days. So for 3 days, you just watched price doing its thing, and there are people who probably were buying here, hoping price would go up, and the stop losses were getting hit. In fact, probably on the second day, first day or second day, you probably had an indication that price wasn't going to go anywhere here, because it tried here and it couldn't do anything, and it came down and it tried again and it's still stuck in your zone, and entered the sell. And how much was this? Nearly 1,000, nearly a thousand, nearly 1,000 pip drop. 1,000 pips, 1,000 pips. You probably could have closed there. That's nearly 337 pips, and you waited for what would happen here, and then you entered for the remaining 470 something pips. So basically, you probably could have, from this whole move, probably could have walked away with around about 800 pips. The 1,000 pip drop, the 200, you probably would have lost it waiting here, and you probably could not collected all the 1,000, because you probably would have stopped out somewhere here. And then what happens here? You can tell you could have entered here, and as price approached here, you would have been stopped out. You would have collected nearly 400 pips, or let's say 350. Let's say 350. You would have collected 350 pips before your stop loss got hit, and then you waited, and then you spotted that price has done a W there. You spotted price has done a W there. Why I do not emphasize on patterns sometimes is sometimes you don't see them. For example, you just price just shot up, no patterns, no nothing. For example, here, of course, someone might say there's W there, but anyway, this is a long time to wait. Here, price just came up here and dropped. It didn't do any patterns, any funny thing there. Or maybe you can drop down to the hourly. Then you can see some kind of M pattern there. Some kind of M pattern there before price dropped. I sometimes use 30 minutes, but I don't like 30 minutes. So on the 4 hourly, you can basically buy here and hold your trade to the next level. When price comes here, you probably were going to be stopped out, but if you're trailing it safe, then you watched price punching through. And where did it go? Obviously to the next level. Then it dropped down. It didn't go down all the way. We've got like a minor support area. We've got a minor support area there. It bounced from there and it continued up. And the way it broke here, definitely you knew it was going to come here. So from here to there, you could have collected nearly, let's just say 700 pips. Let's just say 700 pips. So these are daily support and resistance lines, and these are 4-hourly candles. If you are looking maybe for a more refined approach, then you probably would drop down to the 1 hour. The hour is a popular time frame as well. I don't usually go down below the 1 hour when I'm trading this. Usually my bread and butter is the 4 hour. The problem with lower time frames is you see a lot of things that make you doubt your entries. You see a lot of things that make you doubt what you're doing. So you see price doing its thing, going up, going down. You probably would have bought here, but then saw price turning down, and you probably would have closed your trade there. And then it did its thing, but now you think no, it's probably going down, and then you would have been left out because price would go out. This is on the 1 hour, but on the 4 hour you can tell that price is going up. That's the problem with lower time frames. Sometimes they play with your mind and you cannot tell exactly which way price is going. If your moving average is here, you probably would have entered somewhere there because moving averages are lagging. You could have probably ended somewhere there, and you probably could have held it until they turned somewhere there or there. I don't know. I don't have moving averages on the chart, but yeah. Let's find another pair. Let's go to gold. Okay, gold is plotted because I've been trading gold lately, a lot of gold. So let's just use the lines that I have, but you get the point. These are actually daily lines, daily support and resistance. And like I said, it does not mean trend lines are bad, or does not mean that channels are bad. But what it does is it often confirms the other things that people use to trade with. I'm looking for a trend line. Usually people forget about this, that if you go back in history, you can actually tell that price was bouncing here or bouncing there, actually because it was bouncing there and bouncing there and bouncing there and bouncing there. It's just doing the opposite. Sometimes people forget that. So yeah, this would have been where you destroy the market, because you've got your trend line there. It has been touched, maybe slightly broken, but it has been touched, and this level has been touched, has not been broken, and price is within the zone, and you could have taken your sell from there and watch it drop for nearly 350, but you would have held it because it dropped here with force and did not go back up with force, but it dropped here with force, breaking this line, this level, and you would have held it for the next level for about 500 pips, for an easy 500 pips from here. If you didn't catch it here, if you didn't catch it here, here you do not close your trade because the way it's breaking the level with force, the way it's breaking the level is with force. Here you do not close your trade, but your stop loss would have come close, and of course then when it rises, then probably this candle or this candle would have taken out your stop loss, your trailing stop loss, and then you would have waited for a signal. Then in this whole area you would wait for a signal, and it shows you that price is not dropping. This is how I've been trading gold. It shows you price is not dropping because now price is on this level and it's playing there, and it's wicks and doing its wicks and it's playing there and definitely not dropping. So you would have entered and I would have closed there because when price came to this level, it looked like it was exhausted. I would have closed there. That's some 273 pips. You do not need to struggle for this. Then it broke out. Then it broke out, and you probably saw the breakout and jumped in on the next candle, and you held for another 139 pips, and you waited for a signal. What you want to do here is you want to see usually price go up, close above that level, drop down, and then this candle most likely you would have bought, but then it did not go anywhere, so you would have been stopped out, you would have lost that trade. It's fine, but immediately after losing that trade, what did you see? You saw that price came down here and then did not go back up again. What does that tell you? You now re-enter. You now re-enter for 168 pips. Probably on this trade, let's give it to you. You probably lost. Let's say you lost not a hundred, 85 pips. We're looking for the longest candle here. You lost 85, 82 pips, something like that, or if you close 50 or 30 or whatever you lost. But when you re-entered here, you collected nearly 150. Then price did its thing again, came to the level again, and you watched it showing signs of exhaustion. The next 4 hours it went down and you collected 400 pips, and we said we are not treating these lines as precise zones, but it's a guide for the zone. So there you'd have closed your trade. Then you watched price get out of the zone. You watched price get out of the zone, and on the next candle you bought. After some 3-4 hours you had 238 pips in the bank. Then it kind of did its double whatever there, which is another signal that I love, and it came down close to the zone for another 250 pips. So you can tell how easy it can be to trade with this. You are not needing to buy systems. That's the point that I'm trying to make. You are not needing to buy systems, expensive stuff, to know some of these things. Does it work 100% of the time? I'm the first person to tell you no. If anybody comes to you and says they've got a system that works 100% that will make you a millionaire overnight, know that that person is lying, and that person is about to scam you. But these are things that you can spot in the market. Our problem is we love to trade the 5 minute. People want to trade the 5 minute. The problem is you probably sold there fine, and it came down here and you closed, and you thought, let me buy, and you bought. Soon as you bought, maybe this candle, soon as you bought, the market dropped. Then you think, okay, this time round let me just sell, and you sold and it went up. You lost these two trades. Then you sold, then you recovered your losses maybe, or maybe just made enough and got closed out somewhere. Then you came down here and you bought, and you closed because you saw this candle and you closed. And maybe you bought here and came here and you closed, and there are so many problems with that kind of trading. And statistics prove that people who trade the lower time frames usually don't make as much money as people who trade the higher time frames. The advantage of the higher time frames, you can simply see where it's going. You can simply see where it's going. The person who is trading the 5 minute, 1 minute, I've seen people trading 5 minute and 1 minute, and sometimes the person trading the 15 minutes. I know the 15 minute is a popular time frame, and the person who's trading the 15 minute, sometimes they have no idea of what they are doing. The person who is on the 1 hour, I believe they can actually see what's going on. The 1 hour, you can see what's going on. The 4 hour, you can see what's going on. 30 minutes, it's one of the time frames I use here and there, but yeah, 30 minutes is still fairly okay. But my favorite is the 4 hourly, then the 1 hour. That's it. Maybe when I'm looking for more precise entries, then I can maybe drop down to the 30 minutes or the 15 minutes. But I would have seen my trades on the 4 hourly or the 1 hour if I've got a bit of more time. I hope this gives you ideas. Let's do underspay. Okay, I plotted this, I don't know when, but Yeah, same deal, same deal, same deal. We've got our zone there. So each time price is coming here, we are expecting it to go up. So we buy, that's nearly 178 pips, and we probably got stopped out. Or if we're trailing it properly, we could have netted something like 232 pips. Then it dropped and came back again, and we bought expecting it to go up, and we probably got stopped out and came down again, and we're watching that it's not breaking this zone. It's not breaking this zone, so we buy again. Now it went to something like 300, but would probably have been stopped out around 280. This is for not doing anything. You're collecting pips while not doing anything, not cracking your head, not doing all the funny things and funny stuff. You're just looking at the market and you can tell where it's going. So yeah, leave a comment in the comments box below if you want further explanation on this. Let's get into the next video where we'll talk about take profits and how to manage the trades. We've done entries. I showed you how to do entries on the daily and entries on the 4 hourly, how I do it. Now we are going to talk about managing the trades. Managing the trades. Subscribe